So I woke up this morning, Tesla stock being down over 3% pre-market, and when I looked into this more, I found that there was some big news between Panasonic and Tesla. Apparently Panasonic is freezing their expansion plans for the Gigafactory at Tesla, so there's maybe some pretty significant news here, and if you're a shareholder of Tesla or considering investing in Tesla, you definitely want to stick around for this whole video. Now, one of Tesla's biggest moats, of course, is their battery production. So when this news came out, of course, it affected Tesla stock negatively. Now, I don't know how the stock is going to perform throughout the day or how it's going to close the day, but this is sure to add a bunch of volatility to an already volatile stock. And like I said, this is all around news that Panasonic is actually concerned about weakening demand at Elon Musk's car company, in other words, Tesla. This of course spooked investors because naturally if batteries are having weak demand, these batteries are put in Tesla cars, then as a result, Tesla cars are also, or most likely also, experiencing weak demand. And of course, if this is true, Tesla is not going to have a good second quarter as well. In fact, earlier this month here in April, Tesla released their Q1 delivery numbers, and the results were not that pretty. The company delivered about 63,000 cars in the quarter. This includes all models of their cars. And this number is actually down quarter over quarter around 31%, and actually missed analyst expectations where they were expecting around 76,000 deliveries. So a pretty significant miss there as well. Now this information on its own may have been acceptable because Q1 in the auto industry is typically the weakest quarter. A lot of people are not buying cars in the middle of winter. And on the flip side, Q4 is typically the strongest quarter for the auto industry. So it does make sense that Q1 is lower than Q4. But now that we're seeing concerns about weak battery demand, and this is going to affect Q2 as well, it does raise the question, is this more of a Tesla issue as opposed to a broad auto industry issue? At this point, Tesla investors have got a taste of profits. Last 2 quarters they reported actually a profit. So now there's a lot of pressure on the company to keep posting profits, even if it's not in the best interest of the company. In my opinion, I think that they should just focus on building out the company, forget about profits. If investors are in the stock right now for short-term profits, just forget about them, ignore them, because a lot of the true long-term investors believe in the long-term vision of this company, and that's when we'll see billions upon billions of dollars in profits if everything gets executed properly. But at this point, really, it's priced into the stock. The Tesla is not going to post a profit for Q1. So if somehow they do come out and post a profit in this last quarter, that'll actually surprise a lot of investors and analysts, and I think the stock will actually have a pretty big rally after that, if it happens. If not, then like I said, I think it's pretty much priced in right now that they're not going to be profitable this quarter. So jumping back to this battery news here, like I said, the plan was initially to have Tesla and Panasonic kind of partner up here and expand production at the Gigafactory by around 50%. And this is because both companies actually predicted a lot of demand for their batteries. But now that we're seeing less than expected demand, it may not make as much sense anymore to put that much money into an investment of expanding this facility. That being said though, what the article headlines failed to go over in a lot of articles that I actually went through is that there is some good news that came out of this from Tesla. Tesla actually said here that they will of course continue demand to make new investments in Gigafactory 1 as needed. However, they think that there is far more output to be gained from improving existing production equipment than was previously estimated. So really, in a nutshell, they're working on more efficiencies than expansions, which in my opinion is good because that'll help improve their margins over the long term. Now, another huge piece of information that's still a wild card that a lot of people don't know about or just choose to ignore is the acquisition of Maxwell batteries that Tesla is actually trying to take over. Maxwell is actually a battery producer, and if this deal closes, it'll actually help Tesla in a few ways. It'll help them reduce costs in their batteries by over 10%. And as a result, this will actually help them improve their margins, and as a result of that, they're going to improve their profits, which makes them much more likely to be profitable in following quarters. Another huge thing from this acquisition, if it closes, is that Maxwell technology actually brings massive improvements to range as well. So this will make Tesla cars and SUVs a lot more attractive as well to the general consumer. So maybe, just maybe, the news that we're seeing from Panasonic is because Tesla is close to closing this deal with Maxwell. Because if this deal does close, Tesla is not going to need as much battery from Panasonic, and as a result, they're going to be producing a lot of their own batteries here in-house. And this would make sense because why would you pay another company to produce batteries which are not as efficient, not as long range, not as cheap, when you can actually do it all in-house now for a lot cheaper, a lot more efficiently, and actually get better performance out of the batteries as well. Now, of course, the media is going to spin this whole situation as a bad situation for Tesla. Oh no, they're cutting their production deal with Panasonic here. This is not good because there's weak demand. But like I said, they're not seeing the other side to this, which is that maybe the deal with Maxwell is closing, which is why they don't need Panasonic as much anymore. I think that if Tesla does announce this acquisition as closed, the share price of the stock will most likely shoot up to over $300 per share. But again, that's just short term. Maybe it happens, maybe it won't. But now at this point with Tesla under $270 per share, it may be an absolute steal. There's so much negativity around the stock right now, which is putting a lot of selling pressure. But even so, it's still holding its weight around the 270 mark. You have Musk with the SEC. That's an ongoing issue where he's facing fines, possibly facing the punishment where he has to leave Tesla. In my opinion, that's not going to happen. You have the delivery miss from first quarter, which they posted a few weeks ago. You have the possibility of them posting a non-profitable quarter after 2 consecutive profitable quarters. So that again brings up concerns. Maybe they can't be profitable over the long term. And now, of course, with today's article, you have a change of plans from Panasonic, which possibly could imply weak demand for their cars. But remember, on the flip side, with every negative point, there's actually a positive catalyst that we're waiting for. The first is in regards to their earnings, Q1 earnings. The numbers have not been posted yet, and they could surprise investors here with a profit. I think that it's very highly unlikely that they'll post a profit, but if they post numbers better than expected, you will most likely see a lot of Tesla bulls pull the stock up a lot higher. The second big thing is that Model Y pre-order numbers are still not released. We do have hints that they may have had some pretty big demand here for these pre-orders, so we may see an announcement on that in their earnings call. And if so, if we do see some numbers and they're a lot better than, say, the Model 3, for example, that's another huge catalyst to push the stock price up much higher. And of course, the third biggest thing, the third biggest elephant in the room is what we talked about, the Maxwell battery acquisition. If that deal does close, it's going to be a huge benefit to the company. It's going to make them a lot more efficient, a lot more profitable, and a lot more appealing. So I really want to know, are you buying Tesla stock at these current prices of around $270 per share? Are you waiting for it to go lower? Are you waiting for it to go back up higher for you to buy in? Let me know in the comment section down below. I did let you guys know in a recent video that I did pick up some Tesla stocks for a swing trade. And if you are interested in watching that video to figure out why I picked up shares of Tesla at that price, make sure to check out the video. I'll leave a link up here so you can check that out right now. Thank you for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.